All right, so you wanted to learn about mutual funds.
And we've got all the info you need.
Yeah, we've gone through all those sources you gave us.
Pulled out all the good stuff,
Oh, the important stuff.
the need-to-know stuff about mutual funds.
Yeah, so by the end of this deep dive,
You'll know all about mutual funds
we'll go through what they are, why they're so popular.
and how to choose the right one for you.
Yeah, so we found this quote from Nobel laureate Harry Markowitz in one of your sources.
Oh, yeah?
Yeah, he said, "Don't put all your eggs in one basket."
That's a good one.
Yeah, and it seems like a good place to start, right?
Absolutely. It really captures the whole idea behind mutual funds,
Yeah.
that idea of diversification.
Diversification, yeah.
But before we get into all that, let's take a step back.
Okay.
What exactly you us a mutual fund?
Right, because it can sound kind of intimidating at first, you know?
It does. It's like, what is this mysterious mutual fund everyone keeps talking about?
Right.
Well, imagine this. You and your friends want to make a big dinner, a potluck. Everyone brings something.
I love potlucks.
So each of you, you contribute a little bit.
Yeah.
And together, you get this huge spread of different dishes. That's kind of what a mutual fund does with investments.
Okay, so instead of just bringing like one dish to the potluck,
Right.
I'm getting a taste of everything.
Exactly. You're pooling your money with other investors,
Mm-hmm.
and that pool is used to buy all sorts of assets, stocks, bonds, even real estate. So instead of picking stocks on your own,
Right.
you're spreading your risk across a whole portfolio managed by professionals.
Okay, so instead of putting all my money into one company, I'm spreading it out a bit.
Yeah.
That way, if one company does badly, I'm not losing everything.
Exactly.
Yeah.
You got it. And that's one of the biggest advantages of mutual funds, this idea of diversification.
Diversification. Yeah.
But it goes beyond just, reducing risk,
Mm-hmm.
because different assets react differently to what's happening in the market. Let's say part of your fund is in bonds.
Okay.
When the stock market goes down, bonds tend to hold their value better.
Oh, okay.
It's like they're a buffer, you know?
So it's like having a built-in shock absorber for my portfolio.
Yeah, exactly. And that brings us back to that Markowitz quote about the eggs in the basket.
Mhm.
It's not just about avoiding losses. It's about making the ride a bit smoother and maybe getting better returns over time.
Right. More consistent returns.
Yeah, that's the idea.
Yeah, that definitely sounds appealing, especially for someone like me who doesn't have a ton of time to be checking the market every day.
Right.
And also, I'm not an expert, So this is where that professional management comes in, right?
Yes. It's like having a team of amazing cooks working on that potluck dinner, right?
Okay, I like that.
Those fund managers, they're constantly doing research, analyzing, and making decisions on your behalf.
So they have access to information that most of us don't.
Exactly. They're like the master chefs of the investment world,
Uh-huh, I like that.
constantly tweaking the recipe to make sure everything turns out great for the investors.
Okay, so we've got diversification and professional management. What else makes mutual funds so attractive to investors?
Well, there's accessibility.
Oh, okay.
You don't need a ton of money to get started.
Oh, okay.
A lot of funds have really low minimums. Sometimes it's like $100.
That's great.
Yeah, it's like being able to contribute to that potluck even if you're a little short on cash.
I like that. So it's not just for, super rich people.
Not at all. Anyone can invest. And then there's liquidity. If you need to access your money quickly, you can usually sell your shares pretty easily.
So I'm not stuck waiting years to get my money back.
Nope. It's pretty flexible. And of course, we can't forget about the time-saving aspect. You don't have to spend hours researching every single stock or bond.
That's a relief.
Yeah, the fund managers, they do all that for you, so you can focus on other things.
I definitely have other things I'd rather be doing.
We all do.
Okay, so diversification, professional management, accessibility, liquidity, and time savings.
It's a pretty good package.
It is. But now I'm wondering, there are so many different mutual funds out there.
There are a lot.
How do I choose the right one for me? It's like walking into a restaurant with a million things on the menu.
Yeah, it can be overwhelming.
Where do I even begin?
That's a great question. And that's exactly what we'll be talking about in the next part of our deep dive.
Okay, great.
Because, just like food, there's a mutual fund out there for everyone.
I'm ready for the next course. Let's do it.
Okay, so let's unpack these different types of mutual funds.
All right, let's do it.
It's like walking into a grocery store, right?
Oh, yeah.
So many options.
Too many options sometimes.
But don't worry, we'll help you find what you're looking for.
Okay, good.
So first, we can categorize them by the types of assets they invest in.
Okay.
A good place to start is with equity funds. They mainly invest in stocks,
Stocks.
which
Yeah.
represent ownership in companies.
Oh, okay.
So if you're looking for long-term growth
Mm-hmm.
and you're okay with a bit of risk,
Yeah.
equity funds might be a good fit for you.
So they have the potential for higher returns,
They do.
but they also come with more risk.
Right, exactly. It's like investing in a brand new company.
Right.
There's a chance it could really take off,
Right.
but it could also fail.
Okay. So higher risk, higher reward.
That's the idea.
Makes sense. What if I'm looking for something a bit safer?
Okay.
Like I'm getting closer to retirement and I want to protect what I've saved.
I see.
What would you recommend?
In that case, you might want to look into bond funds.
Bond funds, okay.
They invest in bonds, which are essentially loans to governments or companies.
Okay.
And bonds tend to be more stable,
Mm-hmm.
less volatile than stocks.
So it's like lending money to someone you trust
Yeah.
and knowing they'll pay you back with a little interest on top.
That's a good way to think about it,
So bonds are less risky than stocks.
generally.
Yeah. Especially in the short term.
Right. They provide a steady stream of income,
Oh,
which can be appealing to retirees
right.
or anyone looking for stability.
Gotcha. So equity funds are like the exciting high growth option, while bond funds are more like the safe and steady choice.
That's a good analogy.
But what if I want a little bit of both?
You want the best of both worlds.
Yeah. Some growth potential, but also some stability.
Well, in that case, you've got balanced funds.
Balanced funds.
They invest in a mix of stocks and bonds,
Oh, okay.
trying to provide a balance of growth in income.
So I can have my cake and eat it too.
Ah, exactly.
What other kinds of funds are there?
Well, you've also got gold and commodity funds.
Gold and commodity funds, all right.
Those invest in things like precious metals, oil, agricultural products.
Okay.
They're often used as a hedge against inflation
Against inflation, okay.
because when prices go up,
Yeah.
the prices of these commodities tend to rise as well.
So it's like a way to protect myself from losing money when everything gets more expensive.
Exactly. It's like a little insurance policy
I like it.
for your portfolio.
And lastly, what about money market funds? I've heard those mentioned a lot.
Money market funds, those are like the super safe option.
Super safe, okay.
They're like the savings account of the mutual fund world.
Got it.
They invest in very short-term debt securities,
Okay.
things that are almost as good as cash.
Almost as good as cash, okay.
So they offer very low returns,
Right.
but they're also extremely low risk.
So if I need a place to park my money for a little while, like if I'm saving for a down payment or something,
Exactly.
a money market fund could be a good option.
It could be.
Okay, so we've got equity funds, bond funds, balanced funds, gold and commodity funds, and money market funds.
Those are the main ones.
So how do I actually choose which one is right for me? It's like, how do I decide what to order from this giant menu?
Uh-huh. That's the million-dollar question.
Yeah,
Well, first, you need to think about your risk tolerance.
my risk tolerance. What's that?
That's how much risk you're comfortable taking with your investments.
Okay.
Are you okay with big ups and downs, hoping for big gains? Or do you prefer a smoother ride, even if the returns are smaller?
I think I'd prefer a smoother ride.
Okay, that's good to know. It's a very personal decision.
Yeah, it is.
Someone saving for retirement, decades from now,
Right?
they might be more comfortable with risk.
Yeah, they have more time to recover if things go wrong.
Exactly. But someone closer to retirement might want to play it safe.
Makes sense.
So risk tolerance is the first thing to consider.
Risk tolerance, got it. What else?
Then there's past performance.
Past performance.
Now, it's important to remember, past performance doesn't guarantee future results,
Right.
but it can give you an idea of how the fund has performed in the past.
So we're looking for funds that have done well consistently.
Exactly. You want to see how they did in different market conditions,
Okay.
good times and bad times.
Yeah.
It's about judging their track record.
Their track record, all right. What else?
Fees and expenses,
Fees and expenses.
these can eat into your returns.
Oh, okay.
So you want to pay attention to them.
So we want to find funds with low fees.
Lower fees are always better.
Got it. Low fees, check. What else?
Next, you need to think about your investment goals.
My investment goals, right?
What are you saving for?
Mm-hmm.
Retirement? A down payment?
Yeah, those are big ones.
Make sure the fund's goals match your goals.
So if I'm saving for a down payment on a house,
Yeah.
I probably wouldn't want a super risky fund.
Probably not. You'd want something more stable.
Something more predictable.
Exactly. Your investment horizon matters too.
Investment horizon.
That's how long you plan to invest the money.
Oh, okay.
If you're investing for retirement,
Yeah,
you might be okay with more risk.
because I have more time to recover.
Exactly. You can ride out those ups and downs in the market.
Right.
So risk tolerance, past performance, fees, investment goals, and investment horizon.
That's a lot to consider.
It is
But it seems like we've covered everything.
almost everything.
Oh, okay. What else is there?
Well, there's one more thing we need to talk about. Taxes. Yeah, taxes. They can be a bit of a headache sometimes,
Right. Nobody likes thinking about taxes.
but they can really impact your investment returns.
Yeah, that's true. So what do we need to know about taxes when it comes to mutual funds?
Well, it can get a bit complicated.
I figured.
It depends on a few things. Where you live, the type of fund, how long you've held your investments.
Okay.
For example, in a lot of places, if you sell investments you've held for over a year, the profits you make from those are taxed at a lower rate.
Oh, interesting.
Yeah, it's called long-term capital gain.
Long-term capital gain.
Okay, so holding on to those investments for a while can save you some money on taxes.
Got it. So patience pays off.
Haha, it often does. And some funds are actually designed to be tax efficient.
Oh, really?
Yeah, they try to minimize the tax burden for investors.
Yeah, sounds pretty good.
It is. But like I said, it can get complicated.
Yeah, for sure.
Tax laws are different everywhere, and they change all the time. That's why it's always a good idea to talk to a financial advisor or a tax professional.
Okay, so get some expert advice.
Exactly. They can help you figure out all the details and make sure you're doing things right.
Okay, makes sense. Speaking of expert advice, we can't talk about mutual funds without mentioning a certain someone.
Oh, you mean Warren Buffett?
The one and only.
Yeah, he's got a lot to say about investing.
He does. We found this quote from him in one of your sources.
All right, let's hear it.
He said, "Diversification is protection against ignorance."
That's a good one.
It is, right? And it's so relevant to what we're talking about.
It is. Because most of us, we're not financial experts.
Right.
We don't have the time to analyze every single investment opportunity out there.
Exactly. And we might not have the knowledge either.
Exactly. But with mutual funds, we don't have to be experts.
That's right.
We can rely on the fund managers.
Yeah, those professional managers.
Yeah, they do all that work for us. They diversify our portfolios, manage the risk.
So it's like having a team of experts on my side.
Exactly. You
Yeah.
get the benefits of their expertise without having to do it all yourself.
It's like having Warren Buffett himself managing my money.
Almost.
Okay, so mutual funds make investing accessible for everyone.
That's the goal. They give everyone the opportunity to participate in the market and grow their wealth.
Right, it's not just for the wealthy elite anymore.
Not at all.
Well, we've covered a lot of ground today. What they are, the different types, how to choose one, even the tax stuff.
Yeah, we've been through a lot.
So what are some final thoughts for our listeners? What should they keep in mind as they continue learning about mutual funds?
I'd say the most important thing is to keep learning. Keep asking questions.
Don't be afraid to ask questions.
Read those fund prospectuses.
Okay.
Research different fund families. Do your homework.
Do your homework, yeah.
The world of investing is always changing, so you got to stay curious and stay informed.
So don't let this deep dive be the end of your journey.
Right.
Use it as a starting point to learn even more and explore your options.
Exactly.
And if you need help, don't hesitate to talk to a financial advisor.
Good advice. They can help you figure out the best approach for your specific situation.
So as we wrap up this episode, what's the one thing you want our listeners to take away from all this?
I hope they understand that investing isn't just for the rich and famous.
Right.
Anyone can invest.
Yeah.
Mutual funds provide a great way for anyone to participate in the markets, grow their wealth, and build a better financial future.
That's a great message to end on. Investing is about taking control of your finances, building a better life for yourself and your family.
That's what it's all about.
Well, thank you so much for joining us on this deep dive into the world of mutual funds.
It was my pleasure.
We hope you learned a lot, and we hope you'll keep exploring this fascinating world.
And remember, happy investing.
Happy investing, everyone.